Hey, welcome to MoneyMatters. It's a beautiful year. This is my first video of the year. The video I did last time was actually a video shot before I traveled. I did that while I was still out of the country. I'm doing my first video of the year in Nairobi, and it feels good to do this here. And by the way, just before we go on, we have lots of stuff coming up, lots of projects with regards to interviews with people doing amazing stuff. So yeah, stay tuned for lots and lots of real stuff, real good stuff. Otherwise, our first video of the year, I'm going to be looking at some low risk investments that can give you very good returns. So most of the time, there are people are risk averse and probably they haven't done any investments before. They don't understand the investment world. They don't understand stocks. They don't understand all this aggressive stuff like crypto. They don't understand things like NFTs. And therefore, they just want something more straightforward, something more affordable, something that you can actually dip your feet into, and you will rarely get burned or you will rarely lose money. So what are some of the low risk investments that you can make quite easily and quite fast and quite efficiently and end up with very good returns, while at the same time not really risking so much of your hard-earned money? This is something that's very important. As we start the new year, I'm sure so many people want to start investing. And usually I do say, if you haven't invested before, it's way better for you to start small. Start with something more conservative. Start with something safer, something that will not really discourage you from investing. Because a lot of people, they try to get rich quick. They get into very aggressive investments without understanding the intricacies of these investments. Then they lose money and then they stop investing. They get burned and they get fearful and they become very averse to taking any risks again. There are also people who are just not risk takers. They don't like taking too much risk. So they will like investments which are more guaranteed, more controlled, and more assured. So yes, we're going to be looking at some of the low risk investments you can start doing in 2022 right now and start making some decent returns on your money. Instead of leaving your money in the bank, you should be investing in this particular investment options, and you will be able to start making some cash as soon as possible. As usual, here at Ken's Money Matters, we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income, basically financial freedom. Welcome again, guys. So happy New Year, happy 2022. I hope you started it great. I hope you're enjoying it. I hope you are going to have a financial literacy filled year. And I have so many people coming to me. They want to do coaching. They want to do Forex trading. People are interested in making their finances better. Welcome all, and we're going to have a wonderful year. So, which is the first low-risk investment that you can start with right now and start making money in 2022 without risking your principal amount? It's Treasury Bills. Treasury Bills are quite easy and efficient to invest in. They are low risk in that your principal amount is always secure. So with Treasury Bills, they're offered by the government. Basically, the government is borrowing money from you. They use that money and they return your money with some interest. They are short term, so we have the 92 days, we have 182 and 364 days. So you can have 3 months, 6 months, and a whole year. You're gonna fix your money, you're gonna give your money to the government as a treasury bill. You buy what we call a coupon, basically, and you buy it at a discounted rate. When you buy it at a discounted rate, then it means you will get better returns when the money matures. So, for example, a coupon rate could say it could be worth 100,000, but you're buying it at 90,000, and therefore you know how much return is determined. You know very well how much you're going to get as return on that particular investment when that coupon matures. Treasury bills are really good investments, and this is something I've mentioned in my channel a lot. Look at how to buy treasury bills. I've done a video on that. I've done a video on the process of opening a CDS account, which you must have for you to invest in treasury bills. You can invest directly with the Central Bank of Kenya or through a broker or through your normal commercial bank. Treasury bill is one of the best investments you can get into. The average rate of return for the past 1 year has been 7.8. But remember, it can go up to 10% because it depends on how long you want to fix the money. Like I said, there's 3 months, which is usually around 7 point something percent. There is 6 months, usually around 8%. And then there is 1 year, 364 days, and that goes up to 9.9 or even 10%. That is a decent return on your money. So this is one of the best investments you can make this year and start earning money instead of leaving your money in the bank where it is actually losing value. So like I said, with Treasury Bills, you must have a CDS account and you should open that directly with the Central Bank of Kenya. I've done a video, I'll link a video here on how to go about that. The next investment that you can make in 2022 that's low risk is bank deposit. I call them certificate of deposits. So basically this is whereby you get into a bank, you tell them, I have this amount of money, I want to fix it for this period of time, and you can give it back to me after that period elapses with some interest. Bank deposits are quite old, as I would say. They have been there for a long time. The risk is usually quite minimal with regards to bank deposits, because if you invest, let's say, 1 million Kenya shillings, you will get your 1 million Kenya shillings plus the interest. The risk of you losing the principal is basically not there because there's no fluctuation of the principal amount. But of course, there is always a risk to an investment, right? So you know what happened with Chase Bank, you know what happened with Imperial Bank, you know what happened with Dubai Bank. You know that a bank can go down. A bank is basically a company. It's a firm that can basically go down depending on management, depending on economy, depending on many other things. So a bank can fall. And that has happened. You've seen that happen in Kenya and in other countries. So usually in the Western countries, there's an amount that is insured. So if the bank goes down, there's an amount that is insured that will always be paid back by the regulatory authorities. In Kenya, that also happens, but usually it takes much longer. It's a longer process. And things are not just as structured. So you're taking the risk of, you know what, if the bank goes down. But that's a risk that's worthy. It's the risk that you're also taking when you save your money in the bank. So with just normal deposits or normal savings account, you still take the risk of the bank going down and you not being able to withdraw your money. So this is something that you have to think about. All investments have some level of risk. These are just low risk. Most of the time, this is a very low risk investment and you can get very decent returns. Right now, if you go to most banks, you'll be getting up to 7%, 7.2, 7.8, 7.9. Again, you can also negotiate depending on how much money you have. So some people have quite a lot of money in their account. So let's say you have over 10 million, for example, the bank would basically be willing to give you better interest rate than someone who has maybe 500,000 or 1 million. So it depends again on how much are you going to invest with them or fix with them and how long are you going to fix it. So if you're fixing it for 3 months, it could be lower. If you're fixing it for 6 months, it could be a little higher or slightly higher. And if you're fixing it for 1 year, which is most of the time the maximum, then again, it will be better interest rate, depending on how long you want to fix your money. And you know you won't have access during that time. Usually, if you break that, it becomes fine and you get to lose your money. So certificate of deposits, another low-risk investment that can give you decent returns in 2022. And then we have Treasury Bonds, one of my favorite investments. I talk about this all the time, Treasury Bonds and Treasury Bills. Treasury Bonds are also just the government taking money or asking you for money so that they can do their own projects. They can fill any deficit they have in their own budget. It's basically what we call domestic borrowing. So the government basically asks for your money, they use that money for their own projects, then they give you back your money with some interest. With Treasury Bonds, once again, is the same procedure in terms of the CDS account. You must have a CDS account. They're offered by the Central Bank of Kenya. They're auctioned every single month. And by the way, just to mention, Treasury Bills are auctioned weekly. So there's always a new Treasury Bill being auctioned. For Treasury Bonds, they're auctioned every single month. So it means every single month you can have something to invest in. Now, they're amazing because first of all, they're secure. So your principal amount is always safe. They're very guaranteed. The returns are guaranteed. So if it's 10%, it's 10%. If it's 12% on your money, it's 12% on your money. If it's 14%, it's 14%. So it's a guaranteed return. And of course, there's the security of your money because it's the government that is offering this. Chances are they will not default. And if they do, they can even print money and give you that money. So they haven't defaulted. If we look at the ratings of developing countries, Treasury bonds, they're usually quite low. But in real sense, our governments rarely default. Most countries haven't defaulted on their domestic borrowing, domestic debts. So Treasury bonds are amazing investments. I always tell people that it doesn't make sense to go into aggressive investments while you have such safe, good, guaranteed investments that you can actually make and still get good returns. So some people are usually chasing stocks, for example, in Kenya can be very volatile. Crypto is something you may not even understand what's happening with it, NFTs and stuff like that. Very complex investments. You're living the safe investments that could actually give you decent returns and lots of security to your money. So this is something I tell people all the time. Start with an easier option. Start with an option that you can easily understand. So most people now are going into treasury bonds, and they say that most individuals who invest in treasury bonds are foreigners. So I want more Kenyans, more locals, more Africans to start investing in treasury bonds. The returns from treasury bonds are also quite regular. So they give you returns every 6 months. So for example, if you fix 100,000 shillings, let's say you give the government 100,000 shillings, they will be paying you an interest of, let's say, 14% on that money every year, but the money will be paid twice a year, so every 6 months. So if it's 14% of that money, they will divide what you're getting yearly and pay you twice. So that's a really good thing. So you have that regular guaranteed return from treasury bonds. Like I said, the process is almost the same. You have to open a CDS account. You can also do it through a broker or through the commercial bank that you currently have. Right now, some of them go up to 12%, 13%. And remember, there are different types of treasury bonds. There's also what we call the infrastructure bond, which is basically money the government borrows to complete certain infrastructural developments. Infrastructure bonds are not taxed. So that makes them very attractive to most people. And they're also just offered the same way treasury bonds are offered usually. Not every month really, but they come once in a while, depending on the need by the government. So under treasury bonds, you will find different types of bonds. If you find infrastructure bonds, they are never taxed. They are tax-free. But the normal one is taxed at 10% or 15%, depending on the particular bond and the period that they are going to ask for that money. So sometimes they go from 5 years all the way to 30 years, they want your money. But remember, these are regular income things. So they'll be paying you money every 6 months, they pay you money. Every 6 months, they pay you money. This can also be a way of having passive income or a way of structuring your investment such that it brings in cash flow. And then we have what we call the corporate bonds. So corporate bonds are basically bonds offered by companies or parastatals. These bonds can be listed or unlisted. If they are listed, meaning they are in the Nairobi Stock Exchange, then you will obviously know about them. If they are unlisted bonds, meaning they are not in the Nairobi Stock Exchange, then you will get to know about them from brokers, from investment bankers, and such places. Now, with corporate bonds, it will depend on the company that's offering that bond. The risk that you're taking depends on the company. It's basically you investing in a company. And so that company has to be able to meet certain requirements or certain needs or certain standards that you want as a person or as an investor. So corporate bonds are offered by different companies. Like I did one recently, it was a few months ago, that was offered by Family Bank, was giving very decent returns. They were going to fix the money, I think, for 5 years, and it was a good corporate bond because Family Bank is a stable bank. So the company basically is trying to raise capital, and they come to you and they ask you for money. They use that money for a period of time, and they pay you back with interest. So once again, the risk depends on what company you're investing with and their outlook and their performance and stuff like that. That's something that you may have to do some research on before you invest in, because that will solely depend on that company's performance and that company's management. Then we have what we call unlisted equities. Unlisted equities is like investing in small businesses. So it's higher risk, but most of the time could give you much higher returns. So you could have a friend who has a good business doing well. You invest money there, you agree on how much return you want to get. You'd have a brother or a sister or a parent who is doing well in their business. You invest some money in that equity and you'll get back whatever it is that you want to get back. Usually they are higher risk because of you are taking the risk of that particular company. If anything happens to whoever is running the company or the business, then your money could go underwater. But they're also much safer in that you know what's happening. You are to some level in control of what's happening. You understand it's much deeper than you'd understand a bigger company. So it's a knife that cuts both sides. It can be a very safe investment in that you understand the business, you know it very well, and it's more like a friendship or a relationship thing. But it can also be a very risky investment in that the company is just within that particular entity. So it's maybe controlled by an individual, and if something happens to the individual, then you lose the money. And businesses can also go down. And a smaller business will have higher chances of going down than a much bigger business. So you are taking some risk, but still it's a very low risk investment that can give very high return based on the business that you're doing and based on the fact that you're taking higher risk. And of course, if the business is doing well. And then we have what we call commercial papers, which are basically short-term loans to existing businesses. So you can give a short-term loan to a business. It can be a medium-sized business, a small business. And these commercial papers will be a way in which you earn your interest. So they will offer you what we call the commercial paper. You will buy it at a particular rate, and then you will get back your money with interest. I would say they're a little bit riskier than treasury bills, but still they're very good. Commercial papers is a very good investment in that you always get your interest if the company is good or the business that you're investing in is good. Then I would talk about one of my favorite investments that I say every single day, and that is money market fund. Money market funds fall under mutual funds. So with money market funds, you are able to start investing at any time. I love them because they are liquid, so your money is always available for you. It's easy to invest in them. You don't even have to meet anyone. You can do everything online. They are secure. They are safe in that your principal is always safe. Money market funds are basically money that is pulled together in a mutual fund, and then that money is invested in different debt securities. So money market funds are really good places to begin, because sometimes you don't want to fix your money for long term. If you look at the other investments that I've just discussed, you have to possibly give your money for a period of time and wait for the returns after a period of time. But with regards to money market funds, your money is liquid even as it earns interest, and some of them even pay you that interest on a daily basis. So if you're earning 10% per annum, that 10% is drilled down or calculated on a daily basis, and at the end of each day, you have your money in your account. It's liquid, it's easy to invest, they are always connected to our M-Pesas. It's one of the best investments you can make. It's one of the best and the safest mutual funds you can get into. So when I talk about mutual fund, it's basically investors pulling their money together. And when investors pull their money together, there are different categories of mutual funds. So money market fund is one of the safest, whereby they are only investing in debt securities. So make sure anytime you are taking an investment, you know exactly what they will be investing in. In that sense, you know how your money will be used and how risky that investment is. Remember, under mutual funds, you could have money market funds, we could have fixed funds, we could have balanced funds, we could have equity funds, we could have pension funds, we have life strategy funds. We have so many different things under mutual funds. But money market fund is one of the best ones under mutual fund. We have what we call fixed income funds. So it depends on what you choose. Some of them will always involve stocks, and stocks are much riskier, but some of them will just be debt securities. Some of them will just be investing in debt securities, Treasury Bonds, Treasury Bills, commercial papers, certificate of deposits, and stuff like that, things that we have actually discussed. That makes them very easy to invest in, makes them very cheap also to invest in, and makes it a safe investment with very good returns. Right now, some of them give up 11%, Zimele, I think 10%. I've done a lot of videos on money market funds. You can check them out, some of the best money market funds in the country. And even in Africa, I've looked at some of the money market funds in Africa. You can check that out and come up with something that you can do. This is something you can start as soon as possible. With money market funds, like I say, secure, they're affordable, they're safe, they're liquid, and of course you have full control. It's efficient to control and easy because you will basically have your phone to do whatever you want to do there. So it's one of the best and safest investments you can start even as a very young person. If you are in campus, you're doing some side hustle, start putting your money aside. Trust me, it's a good short-term, medium-term, and long-term investment. If you're having any goals, if you're saving for anything in the long term, in the short term, in the medium term, you can start putting your money in the money market fund, so that as you look for more money, this money will be working for you in the markets. So of course, under mutual fund, you could also have what we call the bond funds. The bond funds are basically funds that will be investing particularly in bonds. So if you get a bond fund, then that will also be safe. So because strategically, you're still investing in bonds. So bond funds could invest in treasury bonds or corporate bonds, but that would mean you go through a mutual fund or a broker or a company. Now, you're also taking on the risk of the mutual company. You're also taking on the risk of that particular firm that you're investing with. So if something happens to that firm, then your bonds that you have invested with that firm could have an issue. But it's important that if you're investing in treasury bonds, then you can just do it directly with the CBK. But of course, if you want to go through a mutual fund, let's say you have other investments in that mutual fund and you want to have everything in one place, it's also somewhere you could go to. So apart from money market funds that fall under mutual funds, we could also have a bond fund, meaning that money or that fund only invests in bonds, corporate or treasury bonds. And then of course, again, under mutual funds, apart from money market funds, bond funds, we could also have what we call fixed income funds. These are funds that just invest again in debt securities, things like treasury bills, commercial papers, CDs, and all those things. So again, it depends on what the company calls it, depends on what the mutual fund calls it, but always be careful. When you go to an investment firm, make sure you know exactly what you're choosing and what they're investing in, because that's how you will know if it's a safe investment for you with good returns or it's not a safe investment for you. So make sure you know, because in the mutual fund, we also have like equity funds. and you could have high yield funds, which are very, very risky and very aggressive. So you want to know if it is actually low risk with good returns. I believe these are some of the best low risk investments that you can take right now and start making some money in 2022. Otherwise, guys, we're gonna have a lovely year and see you next time. Against Money Matters, please remember to subscribe, share, like, and comment. Let me know what you think. Let me know what your plans are for 2022. Let's go together, guys. Let's build this wealth. Let's build this wealth. Thank you. Until next time.